Hello and welcome to today's Tax Tip Tuesday. I am your host, Chastity Grady. I am the owner of Grady Tax Plus, where I help service-based providers who are new in their business understand their business structure, understand taxes, and understand their finances, and keep their finances organized so they can feel confident in knowing that they are saving both time and money. So today we're going to be talking about taxes. I am going to talk about a particular tax that is often overlooked in certain businesses, and it's also a tax that not all business owners needs. Okay, so I'm going to break it down for you. We're going to talk about sales tax 101. So we're going to talk about who needs a sales tax permit, who needs to charge sales tax, ways to charge your sales tax, and how to file them. So again, this is going to be sales tax 101, just basics of sales tax. Again, not all business owners need sales tax, but the ones who do, a lot of them don't have it. So I'm going to break it down for you today. If you are new to my live, definitely drop the city or state that you're tuning in from so that I can know where you're tuning in from. I am in Texas, but we serve all 50 states. So we're going to focus this live particularly on some things specific to Texas, but it is applicable to other states. Okay, so before we get started, make sure you like this video, make sure you like this live. Okay, like this live, comment, and share. Share this live with someone who may need sales tax and they don't know it. Okay, share this live. Okay, this also will be a replay, so hashtag replay if you're catching a replay. Let me know that you're catching a replay, and this will also be available on YouTube at some point. If you are subscribed to my YouTube channel, then you'll be able to see this video on there in the coming weeks. All right, so let's go ahead and dive right on into the video. So today, sales tax, who needs one? Okay, so in regards to sales tax, this is a tax that's not necessarily regulated by the IRS. Sales tax is for your state. Okay, your state dictates who should pay sales tax and how much. Your state and your counties. Okay, so for let's just talk about Texas because I'm in Texas. Texas, the comptroller's website, it will tell you in any comptroller's website for your state or your state's revenue department or whatever they call their state's tax department, it would tell you exactly who needs a sales tax permit. Okay, the sales tax permit lets the state know who has services or products that require you to file sales tax returns. Okay, this is how the state gets their portion of the money that's derived from your products that you are selling or the taxable services. So you have taxable services and you have products that both qualify for needing a sales tax permit. So in general, if you're selling a physical product, then you automatically, generally speaking, you automatically need to have a sales tax permit. If you are a taxable service, and I'm going to read out some taxable services to you just so you can get an idea of what is considered a taxable service. So a taxable service could be a photographer, an artist. So if you are in photography, so this also includes videography, artwork. If you have any kind of personal services that you provide, personal services such as massage parlors, insurance services, let's see, credit reporting services, and then other big things that normally doesn't apply to certain people, like amusement services, like if you have like a sporting center. But in general, a lot of people miss out on the fact that with sales tax permit, if you sell online products, online digital products, so if you sell a course, if you sell a membership that has downloads within those memberships, that those downloads can be printed and that becomes a physical product. So you have to make sure that, which is the reason why I wanted to start this live for sales tax, is because people who are selling courses, online digital downloads, so if you buy or if you sell a download for someone like a PDF or something like that, that is a taxable product. Online digital products are considered taxable, and you do have to have a sales tax permit to let your state know that, hey, I have this type of service, I have this type of product that I have in my business, and I'm just letting you know that I will be filing sales tax returns. And the sales tax permit also holds you liable for if you don't file those returns. So you having a sales tax permit makes you liable for filing your sales tax returns. Okay, that's what's keep you liable for that. Okay, so we talked about who needs one. So if you have a taxable service, if you sell physical products, if you have digital products, online products, digital downloads, courses, membership that have some kind of digital downloads attached to them, or some kind of course attached to them, then those can be taxable services. You definitely want to check on your state's website, the comptroller's revenue department, or whatever the name of your state's sales tax department name is. You definitely want to go on their website and see what falls under taxable services or taxable products. Well, any physical products are basically taxable, but as far as those taxable services, you definitely want to look into that. Okay. Before we move on to the second step of ways to charge sales tax, definitely share this video. Make sure you share this video out with someone who may need this information, and definitely give me a like and comment if you have any questions. All right, and hit hashtag replay in the comments if you are catching the replay. All right, so ways to charge sales tax. So there's two ways that you can charge sales tax for your products: digital services, taxable services. So the two ways is inclusive or exclusive. So inclusive, which is the way that I like to do it. So inclusive is when you include the sales tax within the price of the product that you're selling, or course, or service. So for example, let's say if I sell, I'm just going to use easy numbers. Let's just say if I sell something for $10. When you see on my website something for $10, I don't have something for $10, I'm just saying. Well, let me do this. I have a digital download called Over 100 Tax Write-Offs, right? How to save over $20,000 in tax savings. I give you a list of a whole bunch of tax deductions. And so that digital download is $19. So my price of my sales tax price is inclusive, which means that that $19 needs to, the way I price it, I should price it enough to where I can still have a profit of what I'm looking for out of the $19, in addition to the sales tax I need to pay on that, and in addition to any kind of like the fees, the payment processing fees that like Stripe or whoever has, PayPal. So with that $19, it's inclusive, which means that if you buy that download, then you would only pay $19. You won't pay $19 plus anything else. It's my responsibility out of that $19 to pay the sales tax that's needed off of that $19, which is inclusive. Me doing it this way allows me to have a tax deduction for sales tax, because I am the $19, which is the profit, the revenue that I generated. My revenue, it incurred an expense of paying sales tax, and it incurred an expense of the payment processing. So that's an example of having an inclusive way to charge sales tax. The other way is exclusive, which is what you see a lot most of the times if you buy a product from somebody, whether it's a physical product, digital download, course, or whatever. Exclusive would mean, for example, let's say with the download example that I gave you, let's say with the $19, it's not exclusive, which means that if you buy the download for $19, you will pay a sales tax on top of that. So it will be $19 plus whatever the sales tax, let's say, ended up being $21. So what happens is the $2 that was the sales tax, that will go into a reserve. Whatever company, payment processor is, whoever is processing your payments, they should have a reserve of that $2. And then they would later refund that $2 back to you to then pay to the state for the sales tax. When it's done that way, exclusive, then you are not able to deduct that as a tax deduction, because there was money set aside specifically for that. The only way you could really deduct an exclusive way of using this sales tax is if maybe the $2 wasn't enough. Maybe you owed an additional 50 cents, then that 50 cents was paid out of your revenue, which means that you can now take that as a tax deduction. So you can kind of see how, for me, I like to, if you're going to have your sales tax inclusive, or basically pay it within your revenue, you want to make sure that you're pricing your services, pricing your products to include the amount that you want to have taken out for the sales tax. So like I said, with the $19, I have to make sure that out of that $19, let's say my goal was to make $15 off a profit of that, which means that some of it, like say $2 will be taken away for sales tax, and then $2 for the processing fee. And I know that I can deduct all of that, the $4 as a tax deduction, because that came out of my revenue, versus the other way, which is exclusive. So let me know if that makes sense to you. It can kind of be confusing, but for most people kind of just stick with the exclusive. But you have two options on how you can have your sales tax recorded for you. Like I said, inclusive versus exclusive. So if you're just joining in, I'm just going to do a quick recap of what we discussed so far. So we discussed who needs to obtain a sales tax permit. The sales tax permit will let the state know that this business owner has services, products that will require a sales tax return, okay? And if you don't file a sales tax return, then because you have that sales tax permit, your state knows to basically penalize you for not doing that. Some of the services or products that require sales tax are basically mostly anybody who has a physical product. If you sell a physical product, you have to charge sales tax. You have to have a permit to let your state know you're going to remit those taxes to them. Taxable services. There's different kinds of fields that have taxable services. Like if you're a photographer, a videographer, an artist, a massage parlor. I named a couple early on in the live, so definitely catch the replay. What people fail to realize is that if you have an online course, if you have digital downloads that you're selling, those are also taxable services, okay? You have to charge sales tax on that. You also have to remit those payments. So, which is the reason why I made this live, because a lot of people fail to realize if you have online products count as far as courses, digital downloads, anything that that's consumable by someone else. If you have a membership that has downloads within a membership that people have access to, that membership has now turned into a taxable service, okay? So that's who. Now the ways you can charge sales tax is either inclusive, meaning it's all included in the price. You price your services to where you can profit off of whatever that amount is, and then you just deduct what the sales tax is when it's time to pay. Or exclusive, which means that you price your product or your service as is, because that's exactly what you want, and then the consumer or your client has to pay the sales tax on top of that. So inclusive would be you charging $19, they only paid $19. Out of that $19, you're responsible for paying the sales tax. Or exclusive, you charge $19 for a download, plus the consumer or the client has to pay $19 plus $2 for the tax. That would be considered exclusive, okay? And inclusive is you can have that as a tax deduction. Exclusive you cannot. All right, so the last thing, how to pay sales tax. So it's really fairly simple. If you have your bookkeeping in order, it's fairly simple on how you pay your sales tax. So the way and generally speaking, the way it's calculated is that you have your total number of sales, and your sales is includes your services, everything that's not taxable. And that's another thing I didn't mention to y'all. You can have a sales tax permit, but not everything you have would need the sales tax. For example, as a tax professional, tax services are not a taxable service. But I sell online courses. I sell digital downloads. The online courses and the digital download is considered a taxable service. So I would only apply sales tax to those things, but not the tax preparation itself. Okay, so you can have sales tax, but not everything you have needs a sales tax. And so what happens is when you're ready to file your sales tax return, you would take the total amount of everything. So just to give myself an example, I would take the total amount of sales from tax preparation, in addition to online courses, digital downloads, everything. You would include the total amount, and then you would put that in the box. The next box would be what's the taxable services out of this amount. So let's just say, I'm just going to throw a number. Let's say $50,000 was your total sales. But out of the $50,000, only $10,000 was taxable. And you want to look at what's taxable to your state. If you have a nexus, and this is a little bit more complicated. If you have a nexus in another state, that's different. But just taxable within your state is what I'm referring to for this video. So let's say $10,000 was taxable for Texas, and then you would pay the sales tax only for that $10,000. Okay. So $50,000 total sales include taxable, non-taxable services, and then only $10,000 was taxable for sales tax, and then you will pay whatever the percentage is. Normally it's like 8%. 8%. It's normally 8% for sales tax that you would pay on the $10,000. Okay, so a lot of this, like I said, is really easy if you have your bookkeeping in order. You want to ask yourself, how is your bookkeeping set up? How are you receiving your invoices? How are you receiving your payments? So you can determine how to best manage the sales tax. What I like to do is, within my bookkeeping software, I like to have a section for income that is specifically for the taxable services for sales tax or taxable products, and that way I can keep track of it, specifically of what part of the total revenue that I've made, what part of the total revenue is specifically for sales tax. So I can make sure whenever I'm filing a report, I can include the total clearly, and I can include the total amount that's specifically for the sales tax. So if you don't have your bookkeeping in order and you don't know, if I confused you and none of this makes sense, you're like, oh my gosh, I don't have a sales tax for it. Oh my God, I'm not charging sales tax. I'm not managing any of this correctly, and you're someone who want to consult with me, then definitely schedule a bookkeeping tune-up appointment with me so that I can do a review of what you're doing now or what you're not doing, and get you on the right path to being able to manage your sales tax if sales tax is something that you need to have. Okay, you don't want the state to later find out that you had all these taxable services and you had not remitted anything to the state. Okay, you don't want to be in that situation. So again, click the link for scheduling a bookkeeping tune-up appointment with me. If you have questions regarding anything I discussed in this video, then definitely leave me a comment. Definitely leave #replay in the comments as well, so I know that you're catching this on the replay. Share this live with someone who needs to know about sales tax, sales tax 101, so they can know the basics of sales tax, who needs to charge sales tax, how to charge it, and how to go about paying it. Okay, so that is all I have for today's Tax Tip Tuesday. I hope you enjoyed it, and I will catch you in the next one.